Hello, 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 and a massive hello to everybody. Hope everybody's having a great Sunday wherever you may be, whatever you may be doing. This is 50 Pips rocking and rolling 20th of November 2016. No trade calls, no recommendations, or responsible for their own stuff. We're here for educational purpose only. So, what's going on? What's going on? So, again, thank you all the guys who've been retweeting and sharing this stuff, is always very much appreciated. Just a little comment, a lot of people asking, some of the newer people asking, sometimes you refer to a trade or something in these weekly sessions, in these weekly Sunday updates or in the Twitter feed in terms of some positions. Now, everything we talk about is stuff we do pretty much live in the weekly webinars, right? So it's just referring to that. That's just the way for us to keep things easy and to make sure that we're always talking about the same thing. And I don't get myself confused. I'm always talking as if everybody's been following all the stuff we do. But again, all the trades we look at, all the positions we're in, we all call live in those sessions. So what's going on for this week? Now, keep in mind that we've got a shortened holiday week, right? So we've got Thanksgiving on Thursday, so market's closed, and then on Friday we have a shortened trading day, right? So we just have to keep that in mind. These are always kind of funky weeks. We've got FOMC meeting minutes out on Wednesday, right? And the Thursday jobs numbers are pushed back to the Wednesday because of the holiday. And we do have a fairly light data calendar with Draghi speaking on Monday. So this is a fairly uneventful week in terms of the data front, and also in terms of location on the charts. We're kind of just like hovering, so I was really not too inspired, so I haven't really prepared anything. We're just going to freestyle it and just look at some charts, because what's the big issue? The big issue is, are the bonds going to bounce? They're getting killed, right? Are the equities going to correct a little bit? They're going sideways. And is the dollar going to correct a little bit because it's going parabolic, right? So if you're looking at the dollar index, what's going on, right? We're just going straight through those highs, right? Triple tops, we all know, tend to break to the upside. Even if they don't break straight away, these kind of tests tend to break. So here we've broken higher. So clearly, it's the same discussions we had on euro, right? Is this extended? Sure. Is this extended? Would it be healthy to see a pullback? Sure, it would be healthy to get a pullback. Does it have to happen? No, right? Not now. It could wait. So the big question is, what's going on here? So here we're on the daily, right? So I think the big thing is to keep in mind, if we get a very shallow retracement, you'd expect any move back into this breakup zone to catch a bid, right? So any move back down here to be corrective, and then just skyrocket. If we get a move back below here and we get daily closes below, then we could come down, we could start, we've got a bunch of levels. We got this rip up zone, this previous high coming in here, so we could get a bigger correction. So again, this is extremely bullish. So unless something happens in terms of news, you'd expect the correction, whether it's number one, shallow, or number two, wider, or number three, aggressive, still to be a corrective move for ultimately repress higher, unless something changes in terms of data, in terms of expectation, in terms of Fed hikes, et cetera, right? And no need to go through the bonds and everything, because, right, everything's pretty much correlated. So if you're looking at the equities, what is still particularly interesting, right, is the fact that a lot of people have been getting excited. But if you look at the, if you look at the Dow, and we're not huge fans of looking at the Dow, but just for the hell of it, what have you got? You've got that Friday trade, Thursday, Wednesday, Tuesday, Monday. It's very important to highlight that we've absolutely gone nowhere, right? So here you could easily make a case that we're trying to build a base, we're going sideways, and we're going to rip back higher, and you could easily say, well, this is starting to look a little bit heavy, it can't get any traction, and we've got to correct right back down. So I think both discussions make sense, right? And you could easily make a case for either of those. It's just very, very tricky to call either way. So you just have to be patient and let this break, right? We're going to have to see which way the cookie crumbles. And I know there'll be a lot of people, you can see it here on the daily, very happy to buy highs. The way we look at the market, we still feel that this would be the healthy move, right? Whether it's for a rip higher or a bigger correction, we still feel that this is the healthy move, right? It doesn't mean we're going to get there. Now, NASDAQ's been a lot weaker than everything else. If you see here, we're still stuck inside of the of that election day range. And as we said, a lot of people are still going to be looking to try and get short on any bounce here, looking for these whole highs to hold and looking for a retest of that election day range low. So that still seems to be a valid way to look at things, even though it's a tricky one. And if you look at the ES, basically, right, it's similar to the Dow in the sense that it's not really going anywhere, right? Is it trying to continue to press higher? Sure, it's trying to continue to press higher. It keeps on catching bids, right? But it's a tricky one because it can go either way, right? The bottom line is that they're looking bullish. Unless we start to break heavy, chances are it's going to try and rotate back higher into those 2200s. And the key level to watch is, it's similar to that discussion on the dollar index, right? You know, this would be healthy correction, bigger correction, but these could still all be corrective for ultimately a move back higher into the year end. So that's the tricky thing, right? That's the tricky thing. Again, it really depends what happens with rates, etc. It's just far from ideal locations across the board. Now, you know, I'm the first one who likes to be very bold or likes to be very aggressive with calls on charts, but here it's just everything, just stuff isn't that clear. Yeah, it is what it is. Unfortunately, we have to play the hand we're dealt, right? If you look at gold, what's happening on gold, where we're holding heavy, and as we said, you know, once we break below that range, which we were looking at, which is 1250, 1300, 1350, there's not an awful lot until that 1200 mark, right? So here, the question is, there are going to be a bunch of stops layered below the 1200, which is, you know, everybody would say this is a decent support coming up, right? It's going to be an important support. So the question is the market going to let it come right back down and bounce off that level, right? Is the market going to come back down and take out those stops before bouncing a little bit off those levels, or are we not going to get through those levels? We're going to bounce ahead, right? Now, unfortunately, we don't have a crystal ball. So the way we'll be looking at this going into the week is the following. So you see these lows we made right here, right? So, and market is holding below these. Now, actually, let me do this different. As long as we hold into the beginning of the week below, we would expect the path of least resistance to come back down and try and clip those stops around the 1200. Now, for us, the 1200 is important from a day close basis. Bearish below, bullish above. That means day close below 1200, we expect this to accelerate to the downside aggressively. Day close above, we expect to see that healthy bounce. Now, if early in the week here, we can't hold below this low here, and we start to drift back above, then we think the path of least resistance is for the healthy correction to come in ahead of the 1200 mark, okay? So that's the way we're looking at it. Now, crude wheeling and dealing, we have to wait for OPEC. We're likely going to get a lot of headline risk. Aussie is pukadelic, right? Puke, finally broke off that zone. Any bounce here will find a lot of resistance. A lot of people will be looking to sell that for a move back lower. If it breaks above, then you can consider this a false break, right? If you look at Kiwi, what's going on Kiwi? Kiwi's coming into extremely important support, right? We've got the 200, we've got the bottom line of the channel. The way we'd look at it, we'd look at the 200 DMA as a bull bear line. Any rally and sell, hold below, we expect this to try and come back and take out these next levels of support. If we can get back above, or if early in the week we got a day close above there, then we would expect to see some kind of corrective bounce, most likely back into the 7110s, something like that, right? What else have we got? Yen rolling higher. We're looking for this to come into the 110. Very nice here. The way we look at this here is 110, 109. This is now base support, right? This is support. Any move back into here, and we can't get a day close below the 109, we expect this to continue to be in grind higher mode, right? Day close below the 109.50, we expect to get a much healthier correction. These moving averages are going to start to come back up, and we expect, you know, this 107.50 to be support, right? What else have we got before we forget anything? Cable, again, pretty, we'd call these gift from the gods. We discussed this the other week, basically this double sell right at that big level for the continuation lower. So that worked out pretty well, very, very nice. And if you look at it in the bigger picture here, we've made our way right back down into our next pivotal zone. So look at this early in the week. Hold above 123.47s. We expect this to have a chance to bounce. Day close below 22.77s. We expect this to resume heavy and try and take out new lows for the year. Again, if you look back at the previous weekly outlooks, our bigger view, bigger targets are completely in play on cable. Euro, again, very interesting, very aggressive move on Euro here. So again, what's happened? We've had aggressive move down. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 negative days in a row. You'll have a hard time going back on the charts, eyeballing it, trying to find another run like that. So the more this happens, number one, the more a healthier move would be to be some kind of a bounce. But the other thing you have to keep in mind, the more this happens, especially if it's never happened before, if it's only happened once again since the history of the euro, there's a very good reason. So you need to, it's not something you want to step in front of. You want to wait for the bigger supports to come into play, right? So here, if you look at it on the weekly, where have we come? We're coming back into this level basically where we've bounced quite a lot in the past, right? It's a fairly interesting zone, right? But even if you look at back in the more recent past, right, this is where last year too, where the market caught a bid, right? You see here we tried to pierce, market closed back above. So this is a really, really important support. So the way I'd be looking at this is if we can find some kind of support here, right, then the seasonalities might come into play. This could be a healthy bounce zone, right? If we get this week a day close below the 104.50, then this is going to likely look extremely heavy, and you'll get more and more of the parity cheerleaders coming out, waving the flags, and the market might really try and take a stab at it. We'll have to see what happens with Deutsche Bank. We'll have to see what happens with the Italian referendum. But, we close below there and we start to get hit with some euro negative news. It could get very, very aggressive. Here, most likely or more healthiest outlook, we'll look for it to try and find some kind of support and to put in some kind of a corrective bounce. Most likely sellers will be coming in here into these 107.10s, and if it gets higher, you'll see sellers coming right back all the way into those 108s. You've got some open gaps here, but clearly those are the levels to look at, and we might just get a little relief back into year end, and then the selling will start again in January. We'll have to see. Again, it's a very, very tricky call, but that's the way we're looking at. Those are the levels we're focused on. So I hope this was useful. Thank you so much for Flying with 50, for spending some time with me in this review. I wish you all an awesome rest of Sunday, rest of the weekend, wherever you may be. A great start to the week, and see you around on Twitter. Have an awesome one, and get ready. Make sure you got those turkeys under control for Thursday, guys. Have an awesome one. Take care. Bye-bye.